Good day, fellow investors. Apart from having a great name, Sven also always makes great comments. Thank you, Sven. So, Sven commented here, discussing strategies, when to buy, should we time the bottom or just look for undervalued compared to the market? Sven asks, if I follow your advice, I will lose most of my money in this inflationary situation. You will lose your money power, purchasing power, while you're waiting and waiting for the right opportunity to buy. Investing is a journey in the future. To feel as a contrarian makes you not successful per se. So he is correct in saying that waiting for an opportunity might make you lose the opportunity. I know people that waited for cheaper stocks since 2011. The market is 3x since. But the key is to buy when something falls into the bucket. You just wait with your bucket and at some level you buy. That's what I want to explain in this video. So, of course, those that waited for stocks to get cheaper here or here or here, they missed out on this. But in the meantime, a lot of businesses are okay to buy. And of course, I will not now wait for Apple to get to a P ratio of 10, which would mean that the stock price would have to go from 190 to 60. I will not wait for Apple to get to 60. If I wait for Apple to get to 60, of course I will never buy anything. But if I follow more and more companies, we recently discussed Tyson Foods, BASF, so this is already more interesting to buy. Of course, it's not Apple, but Apple is now priced for perfection for the future, and as Sven correctly said, investing is about the future. If I can buy the right companies that can make me, let's say 10%, 2 billion on the 18 billion over the long term, future cash flows, and even grow, that's something you buy. So when it comes to the question, when is the time to buy something? The answer is not when it's cheaper compared to the market, is when it hits your intrinsic value for your investments that fit your specific risk and reward and financial goals. Let me explain. My intrinsic value, it's my money. Your intrinsic value, it's your money. You have to see what is the risk and reward you are happy with from owning a business. If you are not a speculator. If you're a speculator, then who cares? But if you are an investor that compounds wealth over time, whether you invest in the S&P 500, you compound that to invest constantly over time, you build your wealth pile, then you decide, okay, at this level I will not invest more, at this level I will buy much more, at this level I'll buy a Ferrari, something like that. You have to see how that fits you, and then if you learn to value the intrinsic value of things, then you are an investor, and you wait for the right point that happens more often than you might expect. We discussed this in a recent video, the value investing risk and reward quadrant. Check that video out if you missed it, and there I discussed a lot of stocks and I put those on the quadrant. I will do an overview when I do more analysis. We'll do an overview of this with newer stocks, and there is, let's say, the reward of 5% here in the middle line. One of the videos I made recently was Amsterdam commodities. I think they have already 5% yield. They are usually growing at 4%. So at current prices, you can expect a 9-10% business return with lower risk because it's a food company, looks very stable, has been in business for 200 years, has low competition. And if this 9% is good for you, 9% is a great return for most people, you can start buying over time, and you say, okay, I'm happy with those 9%. If the market works in my favor, I might get 15%. If not, I'll simply wait, I'll accumulate, reinvest the dividend, and build wealth by owning a business. We have discussed more businesses. So Rubis, the risk is a little bit higher because of the debt, but I think they have a 7-8% dividend there plus the growth, so a little bit higher risk, But is an 8% medium risk dividend yield for you good? That's the answer you have to answer. And is 9% low risk good for you? If yes, then you eliminate all of these and you buy those that fit from the stocks you cover. Maybe someday Rio Tinto will get from here to here, and then you say, okay, I like Rio Tinto, maybe it will go even here in a recession when iron ore prices are. So if you follow 20 businesses, it's much easier to wait for the right opportunity. And out of 20, I'm sure, two statistically, whatever the year is, will fall into your bucket. Stocks are reaching all-time highs, Tyson Foods, BASF are reaching all-time lows and or decade lows. So that's very interesting to look at. And keep in mind, we are here to build wealth through owning businesses, not to chasing the market's direction, waiting for it to go cheaper. Something can go cheaper and it then can get even more cheaper. So it's not about the direction, it's about the intrinsic value. And if you look at my stock market research platform, you can see how many stocks here I cover a little bit deeply, how many stocks I look at it. I just finished the Italian market. I did already 150 for the S&P. I will continue that. You can check this. I think this one is on free preview. Did a few stocks here and there, and I'm doing now the FTSE. We'll be done with the next 100 already. So I'm already always looking. You can see here over the years how much research we have done. It's crazy, but don't get overwhelmed. Everything that you need to know is here. And likely this week I'll do also for my research platform a quadrant like this. So when it comes to my investing, 8%, 9% is not that great for me because I'm looking for more. I'm looking for 10, 12, 15% if the market works with me. And that's the kind of things I'm looking at. Fortunately, I'm finding that. So that's why I wait, and over the year I know I get that opportunity. I'm fully invested almost, still a little bit for even better opportunities, but when I find something that I like, I have to buy it that fits my criteria. So it's not just about waiting forever. It is about waiting, looking at a lot of things, and then acting when it fits your or my investment requirements. And that can be 1 a year, 2 a year. I'm very happy with that. Owning businesses, waiting patiently, and over time you compound at very good returns. Thanks for watching. I'll see you in the next video.